Next up, we've got Home Lending Pal. We ready to hear it for Home Lending Pal out of Florida? Let's hear it.
Thank you, thank you. Y'all look beautiful, beautiful. Good afternoon, my name is Bryan Young. I am the CEO and co-founder of Home Lending Pal, and we have built the first AI-powered mortgage advisor, which we call KEV. We are on a mission to help more than 1 million African Americans become homeowners by really addressing the three biggest barriers to home ownership, which are credit, understanding affordability, and then understanding where to get down payment assistance from. Our application is really an interactive personalization app. What we are doing is simulating underwriting with different lenders within our network to give consumers a better understanding of really four main factors: my likelihood for approval, my expected time to close, my best loan product, and then best lenders that give me the best chance of success to work with. We have a network of lenders across the country. We're actually, our lead investor right now is a group called the Mortgage Collaborative, which represents about 20% of the overall origination market. And as we get ready to launch our mobile app, we're even giving consumers a better understanding. If I'm going down the street and I see homes that are in my affordability range, using geolocation to help that consumer really quickly understand what that looks like for them, either getting them to a position to better improve their chances of success with that home, or helping them gather the information, the documentation that is necessary to go through underwriting. Now, the cool part of that is that we're utilizing blockchain, so we're collecting, validating, and then hiding personal identifiable information until after the lending decision is made within the network itself. But more importantly, when it comes to reaching the Black audience, we're really taking more time to understand the cultural influences that prevent us from becoming homeowners, really understanding the social impact, the psychological, economic, personal, and even the just general cultural, just how we were raised as individuals to understand that. And the idea is that if you can engage the hardest to reach segment, it's easily should scale up to others within that network or other races, basically in general. Now, this theory has been working. We found that if we're able to get a user to one of our sign-up pages, about 40% of those users will go through and complete. That drop-off of 40%, we actually think we can get up to 60% because a lot of the African Americans were not using banks that were actually in our network with Plaid. It's okay, I'll keep talking. About one out of three users for us go on to successfully become a homeowner. For those that are not currently qualified, they usually spend anywhere from 3 to 4 months, especially low to moderate income borrowers, before we put them in a position where they are able to connect to a lender. And the data that we've shown has actually been validated not only by IBM, by Inseco as well. We opened up our database. We wanted to show that what we were saying was not just fiction, that it was all fact. Within a 6-week program, we had a little bit over 20,000 users that came into the platform. We were able to successfully help about 800 of those users go on to successfully become homeowners within that 6-week time frame. And we're looking to scale that up. We've just partnered with another group that has a little bit of a database that is a little bit over 30 million users that we'll be able to market to and really promote our product with for consumers that are ready to buy. And it's not just a social cause. By closing the home ownership gap and even closing the wealth gap, you're looking at a 4 to 6% increase in the GDP overall. Our focus is really helping these individuals really understand what home ownership looks like before they go down that path. And as they become ready, indicating to them that they're ready to make this move and this jump towards wealth generation for themselves and their family. But what does that truly mean? To get to a 60% home ownership, or really to close the gap to 60%, that means that we need to put at least 3 million people into homes by 2030, which equates to about 335,000 people per year. Or if you extend that out to 2040, it's about 145,000 additional people per year. Now, that is doable for us because we've had, even with us not doing any marketing, we've had 18 out of the top 20 lenders in the country reach out to us about working and joining our marketplace and our network. So what does that really mean? Well, right now, as we stand today, there's about 21 million mortgage-ready millennials right now today. About 3.3 million of those are African Americans, which represents about 16% of the total demographic. So again, if we can get the African Americans to start going into home ownership, naturally that should scale up to the other ecosystems as well. And we know that it's a great potential. So our revenue model is really based on the lender. So we charge anywhere from $500 to $50,000 depending on AUM. And then we get a percentage of the close, what's known as basis points, that can equal anywhere from 1% to 3%, or to put that into cash, anywhere from $1,500 to $2,500 per closed loan for us. We opened up our ecosystem to lenders last month. The first day we had 14 lenders that signed up for this for contracts through 2022. And right now we have about 2.2 million on the books, and we expect to scale that as we open up our ecosystem to more lenders across the country, and we get state licensing as well. But what does this mean? Well, with blockchain itself is really just a database. So we do give ourselves an opportunity to go beyond just lead generation to really get into servicing and more. We've already established partnerships with Sagent and others that can actually help this process. We've been talking to government agencies, Freddie Mac, Fannie, as well as Consumer Financial Protection Bureau. So even on my own, I did a lot of the groundwork to make sure that as we scale, a lot of the government regulations will favor in our favor as we look to close that home ownership gap. As mentioned, Flagstar Bank is expected to be our largest client. We are currently meeting with their legal team right now. We will close a deal with them by the end of February, and then we will let the other lenders come in after that, which will be a non-exclusive agreement with Flagstar. We're also working on a white label option that will show Powered by Home Lending Pal that shows their products. And I just joined the advisory board for a bank out of New York City.
And you were at time, and you did amazing. All right, let's hear it. Right to the mark, right to the mark. All right, who's got the first question?
Oh, so when you think about consumer acquisition in this space, often is quite expensive, and any financial product, and banks are spending thousands of dollars on a consumer. What have you found early on to be your best acquisition channel so far?
Yeah, it's definitely actually bringing in, so usually PR, media attention. Our publicist is somewhere around here, but actually having users. And it's a theory of similarity where if I see people that look like me having success, it makes me want to join and engage in that. So what we've been doing is we've been having our local users go and do interviews and then posting that onto news stations. And usually when we see that, we usually have a 10x increase in our actual sign-up process. And then outside of that, we're partnering with one of the largest lead generation companies in the country. And that guy mentioned they have about a 30 million database, or 30 million users within their database that we'll utilize to market to. They have about 137 platforms, so we're basically just going to put our options, embed our options into theirs to drive traffic to our platform as well.
How many users do you have, and what were your 2021 revenues?
Yeah, so we're at 28,000 users right now. We actually shut the platform, so we're actually a little bit unique that we actually built based on the consumers, where we open up the public beta, consumers will come in, test, they'll give us feedback, we'll spend a month basically reiterating and then build and release again. And we actually made $90,000 in 2 months, and then we shut the platform down. And that was really for us to really gain greater traction with the government agencies in terms of Reg B is Reg B is really our biggest concern. You know, when does that trigger the start or the time frame for that application, because we're collecting all the documents that are necessary for a 1003. So we were able to get government support, and we expect to join a program for Freddie Mac in Q1 this year.
State licensing, Bryan.
Oh, give him a mic. There we
Your
go.
state licensing, you talking about which state or all states?
So we're going to be nationwide. We've already pretty much applied to all the states now. Because of COVID, most of the state licensing organizations are a little bit slower. But because we're partnering, the group that we're talking about is Suited Connector. Since we're partnering with them, we're basically just going to go under their state licenses until we get our own NMLS license ourselves. But we are licensed right now in Florida, North Carolina, and Illinois on our own already.
Can you talk about yourself?
Oh,
Tell
yes.
us what is your founder market fit?
I'm a 5-town founder. I've successfully sold 4 other companies. I was actually a digital marketing agency. I actually owned one for about 9 years. I did the digital strategy for Obama and the DNC in 2012. And then I went on to lead the global digital strategy group for Marketo out of San Francisco for about 2.5 years. And then my co-founder is actually a former mortgage underwriter for Wells Fargo.
20 seconds. We got any lightning rounds here? We are in Tampa.
Well, thank you everyone for having me.
All right.
Thank you, judges.
Nice job.